the second of our Investment Insight series, Magellan Minutes. This series is designed to provide you with relevant and digestible talking points on global markets, each around 10 minutes. In this series, we're going to revisit some of the conversations we had earlier in the year and share our current views on the sectors and stocks in our global portfolios. We'll also ask our sector specialists what they're looking out for in 2021. My name is Jennifer Herbert, Key Account Manager at Magellan, and today I'll be talking to one of Magellan's investment analysts, Adrian Lu, about our latest views on enterprise software. Thanks for joining us, Adrian.
Thanks, Jen. It's great to be here with you again.
Adrian, enterprise software businesses have been relatively sheltered from COVID damage. Microsoft in particular has gone from strength to strength. How has this company been such a good performer? And do you think this will continue over the next few years?
Enterprise software certainly has been resilient, Jen, although it does belie what's been something of a mixed bag across different industries. And that's because software is used across so many industries. And nobody was impervious to this, including Microsoft, who, like many of its peers, called out, for example, the travel and automotive sectors as particularly hit. But this was somewhat obfuscated when you look at the overall performance, because there were also industries that did very well, like e-commerce, as we know. But overall, Microsoft has been outstanding. It's been a particular beneficiary during this pandemic, because if you look at its businesses, it's quite remarkable how well positioned it is for the trends that we've been seeing in areas like remote working and learning. So think of Office, Teams, security, and its power productivity platform, for example. And then also in digital transformation, which is a bit of a buzzword, but is really about companies adapting, modernizing, and infusing their businesses with digital technology. Now, cloud software plays a key part of that. And then here's Microsoft, who happens to be a global leader outside of China in the public cloud space. It's been quoted many a time, but back in March, Microsoft's CEO said he'd seen 2 years worth of digital transformation in just 2 months. And when I spoke with the company, they said this comment was really about customers bringing forward their transformation priorities and having their roadmaps planned out. And this goes to the second part of your question, Jen, about whether I think this will continue over the next few years. And the answer to that is yes. And even beyond that, I think there are lasting structural changes coming out of this pandemic that have already changed the way companies are thinking about their IT landscapes in so many areas, like resiliency and security and business continuity, supply chains, automation, you name it. It'll be an exciting time ahead.
SAP was also performing well, but the share price took a hit in late October. What happened here, and are there issues that we're concerned about going forward?
So for the benefit of the audience, SAP had a set of midterm financial targets for 2023. At the end of October, the company retracted those targets and replaced it with a new set of targets for 2025. But what it meant was the company was no longer going to hit the earnings targets it had originally set. This was obviously a surprise to the market, and we saw it in the share price, which is now down 17% since the start of the year, in a market where a lot of its peers are meaningfully up. And there were a few reasons the company attributed to the miss, including a more prolonged impact from the pandemic. Now, the pandemic part of it isn't what surprised us. In fact, our view was that there would be a more prolonged headwind for SAP here. But rather what we didn't anticipate was that the company would need to increase its spending for at least the next couple of years to modernize some of its cloud infrastructure and to invest in what it's seeing as an opportunity to accelerate the shift of its customers to the cloud. Now, I think this is a journey that will take time. Migrating enterprise resource planning systems, or ERP for short, it's a monumental effort. These systems are so critical to business operations, and so ERP customers are understandably very risk averse. It's not something you can afford to stuff up. So for SAP, this is going to be very much about getting its cloud solutions right, building out its platform and industry ecosystem with its partners, and getting enough customer adoption and success. And then at the periphery for us, it'll also be about staying on top of the competitive environment.
I believe you recently caught up with SAP's CEO Christian Klein over a call. Did you learn anything new, and how has it informed your outlook on the company?
Yes, that's right. Well, I really wanted to better understand the CEO's long-term vision for SAP. Christian, the CEO, was only recently appointed the sole CEO in April of this year, and he's really been honing the company's strategy ever since. Of course, markets generally don't react positively when a company pulls its guidance, and people's first reactions tend to be, well, maybe something's going wrong here, which is an absolutely reasonable question to ask. But if you look beyond the surface and really peel apart what's going on here, yes, the pandemic has been a headwind for SAP, but it's also spurring customers into wanting to take action with the cloud. The CEO said he's had customers reaching out from around the world asking how SAP can help them to accelerate this transition. Now, change never comes easy. SAP's got a large opportunity in front of it to shift its business model, but it's going to require investment and it will impact its traditional business model. So it's not without risk, but what I'm seeing right now is a company leadership that's willing to forsake short-term earnings targets in order to address its shortcomings and to capture the large opportunity ahead to create long-term value for shareholders.
Finally, could you comment on Magellan's longer-term valuation of these two stocks compared to where we see them currently trading in the market? Is there anything that would compel us to change our view?
Yeah, my perspective is that both SAP and Microsoft remain attractively priced. For SAP, if the company successfully executes its long-term strategy, and we're long-term investors at the end of the day, then I think it'll start to become evident in the growth of its cloud businesses, and it's going to be rewarded. I think all the evidence that we get moving forward will always be an opportunity for us to test that view. And by the way, we've seen other companies in our sector like Adobe, for example, go through what I'd call similar, though not analogous, types of transitions in their time. And so we have an appreciation for the short-term trade-offs in any business model transition. Obviously, we're only at the early innings of this, but I'd say we're supportive of the vision, and I think the new leadership is doing what needs to be done. As for Microsoft, it continues to fire on all cylinders. But again, I think the valuation remains attractive. There's just no company better positioned, in my view, than Microsoft to benefit from this enormous tailwind we're seeing for digital transformation. And if you look beyond the well-known categories of Office 365 and Azure, for example, these are all components of a broader technology stack that Microsoft is building out. And I think there's a lot of option value embedded in the company if you just consider its opportunities in areas like security, workflows, automation, customer relationship management, even gaming as examples. So I think there are a lot of legs to the story still.
Adrian, thank you so much for sharing your insights with us today.
Thanks, Jen.
And thank you for watching. If you have any questions, please don't hesitate to contact one of the Magellan team and feel free to share this update with clients or colleagues as you see fit. Take care and stay well.